This is Tim Yoder with Fit Small Business. Today, I'm going to evaluate QuickBooks Online Plus for Chapter 3 of the Fit Small Business case study. So the first thing we're asked to do is set up a 6% sales tax to be collected on the sale of goods but not services and payable to the state of New York. So we're not going to be able to do this exactly like that in QuickBooks Online, and the reason for that is QuickBooks Online does something nobody else does, and that is actually collect the correct amount of taxes based on the address of the customer and what you're selling them. And so we're not going to be able to just make up a 6% sales tax. It's going to do it correctly. So let's go to taxes here and let's set up our automatic sales tax. Okay. Do you need to collect sales tax outside of New York? Now you could say yes here and it's awesome. It'll actually collect the proper sales tax for wherever the address is. But let's just say no to keep it simple. Okay. Automatic sales tax is set up. Okay. Awesome. So we'll see how that works. We'll say that we're supposed to file it monthly, I suppose. Okay. I'm going to have to be careful not to accidentally file a real sales tax return. Okay, good. So now the program wants us to customize an invoice template by uploading a logo and adjusting the color scheme to match the logo. So it gives us the logo to use. Let me get that into my downloads folder. Okay, so to customize our logo, we're going to go to our options over here and account and settings. Actually, no, maybe custom form styles. No, let's go to our account and settings. Sales. Okay, so the sales form content here, this is the things you can turn on and off in your invoices. What we really want to do here, so this is really great stuff, but what we really want to do is customize look and feel. So we're talking about logo and colors, things like that. So that actually does take us to the same screen we just saw, the custom form style. So let's create a new invoice. Okay, so let's first choose a template. Let's go with modern. Okay, let's add our logo. Let's see if I can just click and drag. No, that just like opened it in another window. Okay. Here's our plumbing logo. Okay, so that put our plumbing logo up there. Splash of color. So let's kind of make our colors match our logo a little bit. Let's go with that. Now, I know it shows it kind of the width distorted. I think that's because maybe my monitor is a little bit wider than it thinks it is or something. But when you print it, it'll print out just fine. Now notice you can actually do an infinite number of colors. You can just put in the color code here. So if you Google like color codes or something like that, you'll find these codes. So these are just some pre-selected ones. You can make it an infinite different number of colors. Well, maybe it's not quite infinite, but very close. Get choosy with your fonts. I'm not a big fonts person. We'll go old school Times New Roman. Okay, you can set your page margins. Okay, I think all that's fine. Hit done. So we've kind of customized our invoice. There are some programs that allow you to customize a little bit more than QuickBooks Online, but this gives you some decent options. You can put your logo on there. You can kind of customize the colors to whatever you want. Okay, good. So where does that leave us here? look at our scorecard for chapter 3 here. So create a sales tax item. I am going to give it credit for that because it goes beyond just allowing us to create a sales tax item. It does something much better and actually calculates the tax itself. We were able to choose our invoice template. We uploaded a logo and we changed the invoice colors. Oh, can we create a personalized message on the logo? We can do that. I'm not sure if it's in here. Here we go. And there is our personalized message, shows up right there. Okay, piece of cake. Looks like you can also enter some footer. See, it's printing it down there. Okay, so we can add personalized messages. Okay, create a personalized message. Okay, excellent. Now, next step. On January 16th, issue an invoice to Family Bowling for the 40 hours of Hank's labor and the $200 permit fee. No sales tax is required to be collected. Well, we'll let QuickBooks be the determinant of that because, again, we didn't collect sales tax in the case study to make things easy, but QuickBooks is going to do it correctly, so we'll see. So let's go New Invoice, Customer, Family Bowling, and let's actually select the project that it's related to, which is the bathroom renovation. Okay, so Family Bowling, net 30. The invoice date is supposed to be January 16th. Okay. Location, New York. Here we go, location of sale. So this is important. This is what's going to determine the sales tax collected. So we'll just leave it at the address we put in, which is not a real address, but this is the address we put in for the company. Let's keep it at that. Let QuickBooks determine the sales tax based on that. That is such a cool feature. Okay, so service date. Let's just use the same, the 16th. Oh, here, no, I'm doing this wrong. Delete that. So we've already entered this stuff in the prior chapter, right? The 40 hours for Hank's labor, that's this. So all we have to do, and we marked it as billable, so all we have to do is come over here and click add, and boom, there we go. How cool is that? Now the only problem is, it didn't add it at the $80 an hour that we charge. Right? That's what we paid for, it was $30 an hour. We charge $80 an hour for it. Okay, and then the $200 permit fee, add that, and there we go. Okay, and there is our bill. So based on location. Okay. Okay, so because we're using fake addresses, I think here we can actually, let's go back and we're going to add these state of New York sales tax here, like we were originally asked to in the case study. Again, because QuickBooks may not work properly since we're using made up. See if we can get by with not putting anything there. Nope. Okay, again, got to be careful not to accidentally file. Okay, so we did set up the 6% state of New York. It's not collecting it on labor. Okay, excellent. Okay, both print and email the invoice. Okay, so we can print it here. Okay, notice it's not using our customized form, so that's no good. Come down here, we can hit customize and see it's set to the standard. We need to select the custom form that we set up. Now we can do print or preview. There we go. There's our pretty new form. Okay, great. Okay, so we could print it from there, and then here we can click save and send. Oh, we've got to have an email. Okay, save and send. Here we can put in a little special message if we want. It's going to attach a PDF of it, and we could email the invoice. Very simple. I'm not going to do it. And so let's just save and close. Okay, so there we go. Issued our first invoice. Let's go to our scorecard. Create a new customer. Piece of cake. Add unbilled labor and expenses to the invoice. We were able to do that. We printed the invoice. We emailed the invoice. Okay, moving on. On 127, record an invoice for the sale of 20 plumbing widgets to Big Time Diner for $25 each. Be sure to collect the 6% sales tax on the entire sale. Okay, so let's go to Invoices. And let's create an invoice. So we're going to have to create a new customer, but I think we can do this on the fly. Big Time Diner. Okay. Save him as a customer. Very good. The invoice date was 127. Okay. New York. Very good. Okay. Service date was the same. Product or service is the plumbing widgets. We want to sell to them 20 of these plumbing widgets at $25 a piece. Automatically pulled that over from our item information. Good, so $500. And we do want to collect sales tax on it, 6%. Okay, so it's still not doing the sales tax. Okay, well, let's see if we can get the sales tax to work. So let's go ahead and save and close the invoice. I'm wondering if maybe we have to somehow tell it that plumbing widgets are taxable. What if we do based on location? Okay, well, let's save and close it. And let's go to our product lists. See if there's somewhere in here we can tell it that this is taxable. Let's see what this... No. Here we go. Sales tax category. Well, this says it's taxable. Okay. Clicked on the invoice there. So plumbing widgets are taxable. So I can't seem to get the sales tax to work correctly. So I went ahead and I calculated it manually and entered it in here. So the sales tax is powerful in QuickBooks Online, but it's complicated. So I can't seem to get it to work. So I just went ahead and entered the $30 there. Okay, maybe we'll be able to get it to work later. So save and close. Okay. Um, okay, so now that we've sold some, now that we sold some inventory, let's see if it's allocating the cost of the inventory we sold correctly to cost of goods sold. So let's look now. QuickBooks Online uses first in, first out accounting. So the first inventory we bought were at $10 each. So we just sold 20 of them. So that should be $200 of cost of goods sold. So let's look at our income statement. Okay, cost of goods sold, $199. Okay, so there is a $1 kind of either rounding error, or it could be because we had that one we had one item returned. Remember, we returned one inventory item, so maybe it took that inventory item out of the first inventory that was purchased. So whatever the reason, it is allocating cost of goods sold well. So it's $1 off from what I expected, but it could be that QuickBooks is correct. Okay, good. And so it should have reduced then our inventory cost, which I think we can see by looking at our products and services. Quantity on hand 139, so it took the 20 out. What is it? Is there a report here, I think? Good. Yep. So there we go. So we purchased the 1450. We sold these items for 199. Okay. So good. So it seems to be doing the proper allocation between the costs remaining in inventory and the costs transferred to the cost of goods sold. That's why you really need to use a good inventory accounting system to make that allocation between cost of goods sold and ending inventory. So we were able to add inventory to an invoice very easily, charge sales tax on the sale of inventory. I'm going to have to give it a 0 for right now. Maybe we'll figure it out later. Determine if the program automatically recorded cost of goods sold. It did. It did use LIFO. Create an item for a service contract. Okay, so that's moving on to the next item. On 131, create an invoice recurring monthly to Trampoline City for $100 per month for a service contract. Okay, let's create a service contract item. So, let's go to our products and services. New, we're going to create a service. And let's do this one to HVAC. We've been doing everything else to plumbing. Okay. Okay, and our service contracts are, what does it say, $100 a month. Okay, taxable rate, standard rate. Okay, save and close. Okay, now we want to create a recurring invoice to Trampoline City, so sales, invoices. Let's create a new invoice. So Trampoline City. Now here, let's go into some details of Trampoline City. In our tax info here, now that is not tax exempt, so it should be okay, but let's say that they're subject to this 6%. See if that does anything. Okay, the invoice date is supposed to be the 31st. Okay, service date the 31st. Product or service is the service contract for $100. There we go. Did I have that tax box checked on that last one? So this one, it seems to be doing it correctly. However, our case study tells us that sales tax is not collected on that item. So let's uncheck that. Okay, so there we go. So now we want to make this a recurring item. Let's save this invoice. Now we want to make it a recurring item. And there we go. So we can do that. I'm not going to do it because it's not going to let us do it backdated. Recurring items can only be going forward. But here you have all your options. So we could very easily make that a recurring invoice. Okay, so let's go back in to this Big Time Diner. And edit the invoice. Try it again. There we go. Yeah, look right here. And look, that $30 didn't even stay. It deleted it. So what about right here? Ha! There we go. Well, that was easy. Everybody was probably watching the video going, all you got to do is mark that box, you dummy. Okay, there we go. Now the sales tax is working correctly, and hit save and close. Okay, sometimes it's the simplest things, right? So let's go back to our software rubric. Charge sales tax on the sale of inventory. Yes, just got to remember to check the box. Create an item for the service contract. That was easy. Set up an invoice to automatically recur monthly. Yes, we could. Okay, moving on. On 120, you receive a check from Family Bowling for the full amount of the invoice. Record the receipt of the check, but don't deposit it into a bank account yet. So this is important for software to do. You want to be able to group your checks together into one bank deposit so that when you reconcile your bank account, the deposits in your system match the deposits on your bank statement. Okay, so we want to receive payment on the 20th from Family Bowling. Okay, well, look at there. So receive payment. Okay, we're going to receive that payment. $3,400 is all automatically set up for us. All we got to do is say that it's a check. We could put the check number in here if we had it. Now this is important. We don't want to deposit it to cash, and we don't want to deposit it to the checking account. Where we want to deposit it to is undeposited funds. It is not giving us a choice for that. Okay, so I think I've figured this out. They've changed the name on me. So our payment method, we're going to receive a check, and we don't want to deposit it directly to the account. We want to show it as payments to deposit. This used to be called undeposited funds. So let's do payments to deposit. Okay, $3,400. Save and close. Okay, now to see if this is really what we want, let's see if we are able to make a deposit now. So let's go to New, make a bank deposit. Yeah, there we go. And there's that $3,400 check that we just received. Okay, so they've changed the name of undeposited funds to payments to be deposited. Okay, so let's close out of this. We don't want to make the deposit just yet. Okay, so that makes sense. Let's go back to our case study. Okay. On 125, an unknown customer comes to the office and purchases a plumbing widget for $25 cash. Record the cash received, but don't deposit it yet. Okay, so we want to just do a sale for $25. Let's go New. And instead of an invoice, let's just do a sales receipt because we don't need to invoice them. They paid us immediately. So let's do a sales receipt. Now we do have to have some customer, so let's just create a customer for walk-in. Okay, and let's see, what did they buy? They purchased a plumbing widget for $25 cash. Record the cash received, but don't deposit it yet. Okay. So email, okay, that's all fine. Payment method, cash, but we're not going to deposit it to our cash on hand because we want to eventually deposit it into our checking account. So we're going to put it into, again, this payments to deposit. Okay, service date was, this was a walk-in on 125. And they bought one plumbing widget for $25. Mark the little taxable. We've got to show that it's the state of New York. Okay, very cool. Very, very good. And actually, you know what? That was kind of cool. Let's look at that. So if we kept it on based on location, it looks like the correct amount would actually be $2.22. But we're just assuming it's just 6% sales tax rate, and so it'll be $1.50. Cool. Okay, so this should take another one of our widgets out of inventory. So let's just save and close. What's happening there? Okay, there we go. Okay, on 130, you receive a check from Big Time Diner for $200 towards their invoice. Later that day, you receive the other $330. You want to combine these checks with the one from Family Bowling and the $25 and deposit them all. So, okay, so Big Time Diner, we received two separate checks. So let's record it as two separate checks. So let's just go to New, Receive Payment, Customer, Big Time Diner. Payment date is 1/30. And the reason we're doing this as two different checks is I want to see that you can receive a short payment on an invoice. So the payment method is going to be a check. We're going to deposit it to that payments to deposit. It's on this invoice, but we don't get the full $330. We only get $200. Okay, and that's important because I want to see that we can, again, receive a short payment on an invoice. Let's save and close. Okay, so we've saved and closed it. So good, it says that it's partially paid. There's still $330 due. That's perfect. So now they come in later that day and they give us the other $330. We can go New, Receive Payment, Big Time Diner. And now it shows that there's 330 open. We received the remaining 330 as a check. Payments to deposit. Excellent. Save and close. Okay. Now it's time to make our bank deposit. So we're going to combine all of these checks with the one from Family Bowling and $25. And we're going to deposit everything we've received. So let's go to New, bank deposit. This is going to show us everything we've stuck in that payments to be deposited account. Okay, so we have the 2 checks from Big Time Diner we want to deposit. We have the $3,400 check from the family bowling, and we have the $2,650 from the walk-in customer. Okay, excellent. So we're going to, now if we had funds that were not recorded yet, like let's say the owner is going to contribute some money for capital, we could add those funds to the deposit down here. Okay, now we want this deposit to go into the checking account, and we're going to hit save and new. So again, the reason we're doing this is if we put each individual payment directly into the checking account, then in our books it would show 4 different deposits, but it's only going to be 1 deposit on our bank statement. That makes it incredibly hard to reconcile. So this allows us to group the payments all into 1 deposit so that when we go to reconcile the bank, it's easy. Okay, save and close our deposit. Okay, excellent. View outstanding invoices. There should only be 1, and that's from Trampoline City. Yep, that's what we got. Okay, so let's do our scorecard here. Receive a check on an outstanding invoice. That was easy. Don't deposit the check. Some software doesn't allow you to do that, but we were able to use that payments to deposit account. Issue a sales receipt for a sale paid immediately. Yes, that was the walk-in customer. We did a sales receipt instead of an invoice. Accept a short payment. Yes, we were able to do that. Combine multiple checks into a single deposit, and also combine multiple checks with that cash into a single deposit. View outstanding invoices. View outstanding invoices without generating a report. Yes, we were able to just do it right there on the screen. Okay, now moving on. On February 5th, Big Time Diner returns 2 plumbing widgets. So they bought plumbing widgets from us and they're returning them. They didn't use them. Okay, so we need to accept them back into inventory, issue them a credit memo, including an adjustment for the sales tax we charged, and view the credit balance in their AR account. Okay, and refund then the credit balance by issuing them a check. Okay, so let's see if we can manage to do this here. So let's go new transaction, dealing with customers. We're going to issue the customer a credit memo. Okay, the customer we're dealing with is Big Time Diner. The memo is going to be dated the 5th. Okay, location is in New York. Okay, let's just do the service date the same. Okay, they're returning plumbing widgets. Okay, and we're going to give them their $25 back. Actually, $50 total. Okay, and good. And here is our $3 adjustment for the sales tax. We're also giving them $3 in sales tax back. Okay, there we go. So let's hit save and close. I don't know why my screen's jumping like that. Okay, there we go. So I think maybe that did everything we needed. So let's see. So let's look first here and let's look at our products and services, see if it looks like that those 2 units came back. Okay, so we got quantity on hand of 40. Let's look at a report and see if we can tell. I think that is taking those 2 back into account. So this year, here we go. Credit memo of 2. Yes, so those 2 units are coming back into our inventory. Excellent. Wow, that's complicated stuff that QuickBooks is making really easy. Very, very nice. Also adjusting our cost of goods sold down here, right? So our cost of goods sold included $11 per unit for those 2 we sold. Well, now we've adjusted our cost of goods sold. There would be all sorts of things you'd have to adjust by hand if you weren't using a good program like this. Okay, now, so the inventory looks fantastic. Let's look and see what it did with our accounts receivable. Let's make sure that that looks correct. So let's look at our big time diner. Yeah, we can see right there we have a $53 credit we owe to Big Time Diner. Okay, good. So now the question is, can we write a check to them for that amount? Well, let's see. I really don't know, but let's keep looking around here a little bit. And we don't want to just print the memo. That's not what we're looking for. What about more? Nope. Okay, I don't think we do it from this screen. So this might be a little bit tricky, but I'm sure we can get it done. So let's do this. Let's go new. And we're going to write a check. Okay, now our payee is going to be a customer, which is a little weird, but I think we can do it. We're going to pay it to Big Time Diner. I want it to come out of our checking account. Okay, and we can print it later. Okay, so this is where it's going to be a little hard. So we need to charge it here. The category is going to be accounts receivable. Okay, Big Time Diner, so yeah, we need to put a customer here because we put an accounts receivable, so we need to make sure we assign it to the customer, Big Time Diner, and I think this was a plumbing job. Okay, so let's see if it assigns this refund to Big Time Diner's accounts receivable. See what else our other options are here. Not really anything. Okay, let's do save and close. Okay, so it did zero it out, right? So here's the $50. So it did zero it out. It still shows this as being unapplied though. My fear is that when we go to do a bill, it's going to apply it. We don't want that. So can we come in here and tell it it's like been applied or something? I mean, we could void it, but that's not going to really, and then we won't have the paper trail. Okay, well this is pretty good. So our overall balance is zero. We will need to be careful not to apply that to a bill in the future. Okay, oh good. Well, that's pretty good. Okay, so let's do the scorecard there. So issue a credit memo to the customer, that was easy. Include the sales tax adjustment, did it automatically. Record the inventory returned back into inventory, it did that automatically. View the balance by the customer. Issue a check to refund the credit balance in AR. I'm only going to give it half a point for that because it really should offset. We needed to offset that credit memo, and I'm not seeing how to do that. Okay. Okay, view transactions summarized by customer. Yeah, we've been able to do that. Okay, the last area is dealing with sales tax. So on 215, write a check to the state of New York for your sales tax liability as of 1/31. Okay, so let's see, how do we pay our sales tax liability? Well, maybe down here in taxes. Here we go. So again, part of the problem might be that it's trying to do this for reality here, instead of just our little case study. Here we go. Perfect. So here's the 3150, and part of it was in February. So let's see, can we write a check? Okay, view return. Be careful not to file a return. Okay, so here's our return. I'm reading up here. I'm going to make sure we don't file this when we hit record payment. And I don't see that we're filing a return, so I'm going to hit record payment. Okay, 3150 payment date. So our case study tells us to do it on 215. Okay, and record the payment. Excellent. So it did not file the tax return for us. It looks like it can't file the tax return for us. I think some states it can, but here it could not. Okay, so really good. View the sales tax liability details. I think we can actually do that. Yeah, there's a report for that if I remember right. Here we go. Let's do the sales tax detail probably. Okay, do it for this year. Yeah, there we go. So there is our sales tax detail. Actually, this just shows us our taxable sales. It's not actually showing us the tax collected. Let's see if we can do something better than that. This year to date. Here we go. That gives us our tax amount, $28.50. Okay, so view sales tax liability detail. Pay sales tax liability with a check. Yes, that we were able to pay it with a check. We were not able to pay it electronically, so we couldn't get QuickBooks to actually send them the payment. We had to write them. We had to actually write them a check. It did not let us file the sales tax return. Subjective ease of use. I think it's pretty good. I'm going for as complicated as material as this covers. I'm going to give it a 0.9. Okay, and that's it for Chapter 3 of the Fit Small Business Case Study for QuickBooks Online.